There's been a heavy stock and a good tape. That's the problem.
That is the problem. Now, the news today, obviously, we know is China sales worse than expected. However, I have to say anybody who's fundamental on the stock certainly wasn't looking at China as an area that was going to go gangbusters, both because of what the economy is doing and because of the geopolitical tensions there. At the end of the day, this is still Apple. They have a huge ecosystem in the iPhone. The services business is fabulous. I'm not particularly very bullish on the eyewear that they've come out with, but who knows? Maybe that will go well. At the end of the day, this is a mid-20s multiple, a stock that buys back a ton of shares. I'm comfortable with my ownership in it. Now, I want to say to you, Scott, because I've said to you many times, I've had about half the market weight in it, and that has felt good until a day like today where you say, geez, I wish I didn't own any of it. However, this stock will find its level. I don't know where it is. I suspect it's around 160, but honestly, folks, you got to just let it find its level. When it does, when it bottoms out, I will be adding to it.
Josh,
there's no fatal flaw here.
Josh, what do we do with this stock, and what's the right way to view it if you own it in a year thus far where so many of the other big names in the space of the mega cap group have just stolen the thunder here for obvious reasons? We talk nonstop about AI. Apple doesn't talk about AI nonstop. In fact, they barely talk about it at all because they don't have anything yet.
So I think the first decision you have to make is, are you an investor or a trader? Okay, great. You're a trader. You're not in this stock anymore. If you have like any sell discipline whatsoever, like an actual trader, not like not like pretend, then you're already out because the momentum here has gone negative. It's got now it's got a lower high in place. The highest high was in December. You got a lower high now in place for 2024, and momentum is toxically low. It's like 30. So if you're a short-term trader, you went into this with an exit in advance, you're already out. If you're an investor, it's a different conversation. You have not been rewarded historically for panicking out of Apple because you think they're about to miss a technology cycle. They don't miss. But the thing with Apple is they also don't originate. They're never first. They're the best. That's the difference. So if in the past you've panicked out of Apple because you thought they were falling behind on innovation, you have been severely punished. They eventually get it right. I didn't expect them to be leading the charge on AI. Nobody internally in that building feels the pressure to do so. They've never done so. They weren't the first entrant with MP3 players. They came out with the iPod and took the whole game over. They weren't the first smartphone. The iPhone came out, 7 years after everyone else's and absolutely dominated the game. This happens again and again and again. So if you're an investor, take a step back, take a deep breath, look at a 25-year chart and ask yourself, point where on the chart it made sense to be overly concerned with recent price performance. Mm-hmm. You can't find that place. It doesn't exist.
Yeah.
So that's my attitude. I've never sold it. I laugh at the downgrades, and I really don't mind a little bit of volatility. The stock has been just incredible over the last couple of years, and it's okay if it has 6 months, a year, where it doesn't give you much. So I can live with that.
So, Rod, the bulls are out today, obviously defending it like Dan Ives, who acknowledges how sentiment is dismal because of these headwinds in China and these China stories about Apple and losing market share and sales down and deliveries, et cetera, have been going on for many months now. So it's not necessarily a new story, but there's still optimism, at least from this corner, Dan Ives, about estimates remain hittable for the iPhone, services being rock solid, pent-up demand for the upgrade cycle. AI is coming. It's just a matter of when, not if, and we think it's probably going to be WWDC, and they obviously have this installed base. So you're in the stock, too. What are we thinking here with the stock, as we said, breaking 170, sitting right there as we speak?
I'm with Josh and Jim on this one. You don't trade this one. You hold it, and it's going to have its consolidation that it's having now. They don't have any new news, and you're getting, traders selling away or trimming positions. But I think if you look at the system, the ecosystem is really why you hold the stock, and then the cash flow. So what they can do with the cash flow are a couple of things, which is either buy back shares or invest in other areas, which they're doing both of. So as a long-term investor, this is not one that you want to trade. And when it's coming off, as some of the other mega caps are, it's okay. And to Jim's point, at a certain point, when it comes back down, you can start kind of adding to it again to this. But it is a solid company, and it's very well diversified. and it will lead at some point again. It's just you've got all the other players a little bit ahead, but then it catches up really fast.
I mean, he's driving the whole market in a sense today, right? Dow component, Dow's down near 300. Big player in the NASDAQ, second largest stock on earth. NASDAQ's down sharply. S&P obviously getting hit as well. I've got Steve Kovac, our technology correspondent, sitting at the desk. And Shannon, I'll come to you in a second, but I want to bring Kovac in first because this is a moment.
Yeah.
It's a moment that you don't ordinarily see. And even when you do, you're pretty much convinced that things are going to turn. What's the turning point here?
Yes. Moment is the exact way to put it. And Apple has overcome moments like these before. You might remember 11, 12 years ago, all the naysayers for Apple saying, oh, my God, here comes Samsung with these big screen phones. They're going to, eat Apple's lunch. Apple is doomed, and so on and so forth. What does Apple do? They put out a big screen phone. Sales go through the roof. Biggest upgrade cycle ever. Here we are with this AI moment. What is Apple's position in AI? Where does it play into this story that we're hearing from its peers, from Microsoft, from Meta, from Google, and so forth? We don't know. All we know is they're teasing something there. What you have to hope is that Apple a couple years ago hired this executive named John Giannandrea. He came from Google, an AI genius over there. They poached him 5 or 6 years ago. He reports directly to Tim Cook. This is time for him to show his work now. Mm-hmm. He has been kind of behind the scenes at Apple for all these years. What does that look like? And again, you mentioned it. Where's the turning point? WWDC. The company has put enormous pressure on itself, Scott, to have some kind of just knock her socks off.
Sure.
With some kind of AI announcement that is going to, one, convince people to start buying iPhones again, not just because their iPhone's 4 years old and they need a new one, but because they want these AI features that Apple keeps teasing. That's going to be the turning point that you're talking about.
It's funny, I wrote, as you were speaking, I wrote down pressure inside Cupertino because I'm wondering what they're feeling. I mean, Tim Cook better than most. And he sort of has this public persona of being as calm, cool, and collected as any CEO we ever see or deal with. I wonder how the stock move is playing inside the beautiful headquarters out there.
They're feeling it. They have to be.
They have to be, right? You said when you sat down here, thank God they have a buyback.
Right. Otherwise, who knows what the stock would look like before that. But you want to talk about what Tim Cook is thinking. In my conversations with him, I talk to him once a quarter during earnings. The shift in tone from the way he talks about AI has changed over the last year. Just last week, during their annual shareholders meeting, talking about features that have been in existence forever. Fitness tracking on your Apple Watch, all of a sudden they're labeling that as AI. Yesterday, new MacBooks come out. They're calling it, I'm going to mess up the direct quote, but basically the best consumer AI PC you can buy. It's all marketing right now. They have nothing, to supplement that or deliver on it. But they are changing their story. They used to be allergic to saying the term artificial intelligence. They would say machine learning or some other kind of concepts around it. Now it's AI, because they know that's what the market wants to hear. So that's the shift in tone.
Sorry, Shan, multi-fronted, if you will, issues. It's China, it's regulatory, it's AI. It's sort of Apple getting it from all fronts,
Well, I think that there's a give and take here, Scott. I mean, everyone, when the China side of the business was going gangbusters, was more than happy to look aside from these potential concerns on the horizon. There's also, Apple itself has really set us up to no longer look at handsets, but look at services. And last quarter, services was a little disappointing, but still growing robustly. Yeah. I think that the challenge here for those that are building a portfolio is that if you can only allocate a certain amount of your portfolio to mega cap tech, then to your earlier point, you're probably looking at some of the stocks that have momentum, some of the stocks that have been performing better, and those that are more on the enablement side of the AI trend rather than being on the consumption side of the AI trend. But I think Josh has a great point here. They're not looking to be the lead disruptor. Look at the divergence between Meta and Apple when Facebook became Meta and they really started focusing only on what was happening from a virtual perspective. That stock languished because they were putting the money in to find the proof of concept. Apple is more than willing to let its competitors find the proof of concept and then monetize it. And to the point about their installed base, we cannot look past that. That is not going to be disrupted. There is no other consumer electronic company, at least in my opinion, that's going to be able to create such a strong installed base. And so do we have to wait for it? Perhaps. but that doesn't mean that they can't continue to grow. You're trying to move the Titanic here, and I think that people are always looking at this company as being able to grow like it did when it was much smaller. But the reality is, with its cap, with its balance sheet, and with the free cash flow, they do have a lot of levers that they can pull at any given time.